What do you make of the volatility that we've seen in gold, and ultimately, where is it heading?
Yeah, I mean, look, one of the other things, as I said a moment ago, that you're going to see volatility, but that's not just limited to equities. Again, I think there's going to be volatility across asset classes, and gold and silver aren't immune to that. I think the fundamental case for gold as a true currency diversifier, I think still remains very much in place. And I think that's the reason why we like that much more longer term. When people talk about potential dollar diversifiers, there's no point going from one fiat to the other. And I think gold really offers that opportunity. So I think there's a real long-term case. And this is the one asset currency where, buy the dip and holding at all levels definitely makes sense. You've seen a lot of speculative positions build up. I think the fundamental case for demand for silver does stand as well. It's just that the markets bought the expectation, they bought the fact. There was a lot of speculation built in. I don't think it's been fully flushed out. I think, as we said in a note earlier this week, that you've had margin requirements being raised by various metals exchanges around the world. And that's just something that's going to, kill off some of the speculation. So we'd rather wait for some of the speculative positions to get, wiped out, unfortunate as it may be. But I think you really need to find a footing. But gold, definitely preferred over silver for a very different fundamental factor.
I just don't recall a time in all of my years when I've seen gold so volatile. So what do you think fair value is? If we are seeing some of the specs being wiped out here, that helps to perhaps explain some of the volatility. What do you think gold should be trading at?
It's a question I get asked very often. And if I just go back to, my definition of gold as a currency rather than necessarily an asset, I mean, it doesn't have a cash flow. So assigning a fair value is a tough task. But measured against dollars, the way I would look at positioning in gold is that, the volatility allows you to use the derivatives market to buy the dip and effectively average down to, somewhere in the 4,500 levels. I do think that there are lines in the sand. I think if 4,500 gets challenged, I think we have probably a further leg down. Silver, I think, has the risk of even coming, if it came down to $60, I wouldn't be overly surprised. But I do think there is a buy the dip opportunity in gold. But I hesitate to put a fair value on something, on an asset that doesn't have a cash flow.